Hey traders, this is Ron Haidt at Market Tamer. Happy Thursday. I hope everyone had a fantastic 4th of July holiday. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Russell 2000. Again, this is a daily chart using profit charts at Thinkorswim. We jumped today over 1%. Volume, pretty good, all things considered. We're now back above moving averages. So the Russell is right back to leading the rise off of this little swing low. The 50-day moving average in orange, it held when we got near it, never touched it on the 28th of June. And then on the 2nd of July, we got near it, did not touch it. And we also popped higher and even did bullish engulfing over the 29th day. So this is bullish. If we close at new highs, that's extra bullish, if you will. So Qs are now bullish on the daily charts. We also have a 5 and a 20-day crossover that, if I zoom in real close, also has occurred. That is a technical buy signal. The MDY, which are the mid caps, they jumped 0.89% today. They also got back above the 20-day, although the 5-day did not cross up through the 20-day. Again, the 5 days in blue, 20 days in red. We did not cross up, so we don't have a technical buy signal on MDY, but by price, we closed above the moving averages. That is short-term bullish, but the IWM looks better. Now, the Qs, they're sort of third on the list. They rose 1.24% today. If I zoom in a little bit, they barely got back above the moving averages. This one will be cautiously bullish. Again, the IWM is looking the best. And then the two laggards, the S&P 500 ETF, the spiders, which I have a long-term bullish position in, they were up 0.82% today. If I zoom in, you can see we're still caught in the old trading range, barely above the 20-day EMA here. And then the diamonds, the DIA, they were up 0.78%. They're above the 5-day, but they are still below the red line, 20-day, and the 50-day SMA in orange right there. So that's the weakest of the 5 majors. So as we stand right now going into Friday, as long as nothing, we don't get a big down day, we're in a position that's starting to look a little more bullish after just looking a little bearish. But again, historically, the markets go nowhere over the summer. So personally, I'm a fan of like covered call type strategies, maybe even iron condors, bull puts, bear calls. I guess if I had to pick one over the other right now, maybe more bear calls than bull puts on the indexes. Again, from an educational perspective, never advice to buy or sell. Let's take a look at bonds, TLT. They were up just over, 0.29%. I was going to say just over a third, but they weren't quite there. But if you look over the past 4 or 5 days, we started to get up above some previous highs. Now we're sideways. Today we popped. We've broken out of the range, so the target right now is up around 126, maybe 3.5, 4 points higher on the bonds. Gold and silver, remember, we were not shocked at all when they broke down in June. They don't do well over the summer, gang, and gold held support around 117, 118. You could argue that it broke it, but it seemed to be a bit of a try to suck everybody in, and now we just pop back 2 days. The new trading range on gold, I could literally do something like this and say, okay, how about 129-ish, and now support 117.5-ish, thereabouts. If we take a look at SLV, we have our double top around 16.25, support just around 14.75. Take a look at some of these staple stocks. General Mills, ticker symbol GIS, was up 3% today. So after earnings, it pulled back, and now we're getting a reversal. If I wanted to trade General Mills bullish, what I could potentially consider is literally put a stop below Tuesdays and Wednesdays low. Intraday lows, 43.36, 43.46. Below there, it gets stopped out. Otherwise, maybe we can catch a run here, back up. Let me get rid of that line. Back up to the gap fill around 49. So maybe as much as 10% higher from a technical perspective. How about Kraft Heinz? Been watching this one. I highlighted the breakout for you guys, 611. We came up, back tested. We were as low as 61.5. Now we're nearly at 64. It popped up good today. Volume was a little light. Target, the 200-day is always something to be aware of, and the 200 days in purple, but then all the way back up in the mid-70s. Taking a look at P&G, Proctor Gamble, nice 1.68% jump. Target 200-day, and then all the way back up towards 90. How about Phillip Morris, PM? This one I asked you guys to put on your watch list just for, again, educational perspective. But we tried to get close to breaking out on 628, back tested. Now we're popping. Technically, I would say it's enough of a breakout. It's not all that great. Volume wasn't that great. But seriously, the target would be all the way up at 100. I mean, that's massive, over 20% potential upside. And then here's XLP, the ETF itself. Nice pop today. Target, of course, 200-day, right? Major moving average, but then all the way back up at those highs. And now keep an eye on Johnson & Johnson, because after going nowhere, I mean, January was a bad month. February, March, April, May, didn't do anything. We started to break down end of May, tried to get back up. We have not been able to close above the 50-day moving average consistently since really the beginning of the year. There was an earnings move, pre-earnings move that got us above the 50-day, but then once earnings came out, it went right back down. Well, now that this is happening, I wish it was on bigger volume, but it did close above the 50-day. So if I could take a bullish position here, if I wanted to, I would put the stop at the low back on 7.2, which was 120.11. That's about $5. Not the end of the world, but J&J is looking pretty decent here right now. That's it, folks. Wish you guys a fantastic Friday and a great weekend ahead. I will see you in the Sunday video. Take good care.